What is better to day trade, stocks or CFDs? Let's find out. First of all, I will answer the question, what is the difference between stock trading and trading CFDs? So first, let's start with stocks. If you buy a stock, you actually buy a part of that particular company. So if I buy a share of Apple, my order goes to the exchange. Someone else is selling their share. I give him money in order to get my share of Apple. But what happens if I buy a CFD of Apple? Then I do not own anything, because CFD stands for Contract for Differences. That means that the broker will mirror the price of the underlying stock. So if you buy a CFD of Apple, instead of you getting an actual share of the company, the broker says, I see you want to buy a share of Apple. Instead of me giving you the actual share, what if I promise I will pay the difference? So if Apple rises in value, I will give you money, but if the share price drops, you will give me money. So far, it seems simple and straightforward, right? It trades like a stock, but it's not a stock, but instead you get a contract between you and the broker. But did you know that CFDs are actually illegal in the United States? And in Europe, they fall under strict regulations. So far so that every company that offers CFD trading have to disclose how much of their CFD traders lose money. So let's check it out. 77% of the investors are losing money with XTB. Plus 5,000, 82% of retail investors are losing money. eToro, 74% of retail investors are losing money. So another one is Interactive Brokers. They have some better numbers. 66% of traders are losing money when trading CFDs. And if you wonder, why do all CFD brokers have to tell how many traders lose money? If you think about it, it makes sense, because CFD brokers have some different tools how they can make money compared to just regular stockbrokers. With stockbrokers is quite simple. You place a trade, you pay a commission goes to the broker, and if you trade on leverage, then you also have to pay a small fee for that leverage. And sometimes they can charge for live data. Probably you tell me, well, we have all these commission-free brokers. Well, they have a different way of making money. We add liquidity to the market and the broker can get the rebates. And if you really want to know how commission-free brokers make money, tell me in the comments below, then I make a video specially dedicated to that. But in general, if you want the fastest execution speed, you pay a commission for that. Speaking of commissions, I would like to thank the sponsor of this video. It is my own broker where I trade with every single day, Alaric Securities. I use their great platform Hammer to trade. They're licensed in the European Union. You have direct access to the market, you have great liquidity, and the best of all, if you click the link below or use my code Jesse, you can get up to 35% off on your commissions. That's an amazing deal. I still pay the full commission price. And back to CFDs, how they make money is way more interesting. They don't need to send your orders to the exchange, because when you buy a stock, you actually buy a stock from someone who is selling that stock. But when you buy a CFD, your order does not go to the stock exchange. Your broker can just act as a market maker. Look at this number. 80% of the traders are losing money. If they know so many people are losing money, so your broker can perfectly take the opposite sides of all the trades and still come out on top. That doesn't mean that CFD brokers never hedge their positions, but in general, the more traders lose, the more a CFD broker can make. Secondly, a CFD broker can mark up the spread. Now, when I trade with my broker, I know I get the best bid price and the best ask price. My data comes directly from the market. I see the highest price somebody is willing to buy the share and the lowest price somebody is willing to sell the share. And actually, if you know what you're doing with the platform of Hammer, there are some secret exchanges. They're called dark pools, and you can get even better fills. But with CFD brokers, you do not have that luxury. It works the exact opposite, because most CFD brokers, they mark up the spread. So you do not have to pay a commission, right? But you have to pay more when you buy a share and get less when you sell it. eToro have a fixed price in how much they mark up the spread. But trading 212 plus 5,000, their spread fluctuates. And now XTB, they have a fun trick up their sleeve. You can trade with the spread of the market, but you have to pay a commission for that. If you do not want to pay that commission, no problem, they will just mark up the spread. Now, this is just a theory, but let's take a closer look what it really looks like with some actual examples. PayPal showed up on my screeners, and I want you to pay attention very closely to two factors. First, take a very close look how fast the candles form, how fast the data goes through. You can clearly see with the CFD broker that the data is way slower. But the other thing that is way more important than slow data is the spread. Look right here for the spread on Alaric Securities. What is the spread? Right here, the spread is 1 cent. Let's now take a closer look at what the spread is on eToro. The spread is 17 cents. And it's not just eToro, also for PayPal the spread is 17 cents on XTB. What does it actually mean to have this high spread? Imagine right now we buy the same stock on eToro and on Alaric Securities. What will be the difference? So imagine I want to buy 100 shares of PayPal. If I want to do that with Alaric Securities, for pay $5,169, and if I make the same trade on eToro, I pay $5,177. That's a difference of $8, but you pay this amount twice. You pay this $8 when you enter a trade, but you also pay this when you exit a trade. Imagine the trade goes into your direction and you want to sell the stock again. You miss out of profit. And the same is true when the stock price goes down. When your stop loss gets triggered, you have to pay more. And these $16 are only the case if you just make one trade of 100. But what if you make 5 trades a day? Then you pay $80 for the spread. And let's say you make 5 trades every day for a week. Then you pay $400. But you probably can say, well, but at least we don't have to pay a commission. And you're absolutely right. So what is a commission you would pay? That is 2,500 shares. If I now look at the fees of Alaric Securities, let's go for the most expensive commission. You pay $0.0035 per share. And this is not even take in consideration the discount you will have with my code Jesse. You have to pay a commission for that of $8.75. $8.75 compared to $400. You pay $390 more for your bet spread. Now, this is just an example of PayPal, but every time the spread is wide, you pay a lot of money. It is so much better to pay a commission than to have a wide spread. In the end, you give so much profit away with just having wide spreads. Especially when you day trade, because when you day trade, you use leverage. That means you will buy a lot of stock in order to make a trade. When using leverage and when trading on a short time frame, your spreads have to be laser thin. Otherwise, you give so much profits away when you sell the stock, and you also have a lot of slippage. You pay for your spreads. Keep in mind, spreads are a hidden commission. Another thing that I have noticed when comparing CFD brokers to my stockbroker is that the tools that CFD brokers offer are very limited. Some things I just do not have, like the depth of market. I also don't have hotkeys, so it takes a longer time for me to get in and out of a trade. And for me, speed is essential. Now you might think, well, it's over, they just mark up the spread, so what, right? I don't care so much about speed, about the depth of market data. I just like to swing trade. But if you decide to swing trade CFDs, then you come with a different fee. That is an overnight holding fee. Depending on the financial product, you have to pay every night you keep on holding that product. And if you decide to hold your position over the weekend, it is possible that you have to pay an extra weekend fee. But it really depends on the financial product you're trading. The general rule is the higher the volatility there is in a product, the higher your fee will be. But you're a trader. You love volatility. It's very important to look into these fees because commission-free trading doesn't mean that there are no other costs involved. Just as the following argument why some people decide to trade CFDs is because on every CFD that there is available, you can go short. When I go on my trading platform Hammer, I see here this little H means hard to borrow, and those stocks I need to reserve first before I can short them. With CFDs you don't have that problem, you can short literally every share that's available. Now, listen to this clear. Every share that is available. Available is the most important part here. Because a lot of hard to borrow stocks, a lot of small cap stocks, they just do not offer because those stocks can have a very high volatility. High volatility means more risk to the CFD broker, so it is unlikely they will put all the interesting small cap stocks and high volatility stocks on there. But keep in mind, it doesn't matter what financial product you trade, CFD, stocks, option, futures, forex, crypto. You have to choose a product that suits you the best, that suits your strategy the best. A few years ago, I was profitable trading CFDs on Interactive Brokers and I absolutely loved the product. I did my research and trading CFDs for that strategy at that time made so much sense for me. But right now I wouldn't touch them because it doesn't fit my strategy. I need real market data. I need to look at the depth of market. I need a good and reliable trading platform. So please do your research and search the broker that is best for you. That is exactly what I did 1 year ago. I was tired and fed up with Interactive Brokers and I was searching until I finally landed on Alaric Securities. It checked all my boxes and all my requirements, and now you can get up to a 35% discount if you use my personal discount code Jesse. Go check them out. Enjoy.